Hey, what's going on, guys? I don't have a lot of time this morning, but I thought I would go live with you for a second and talk a little bit about some of the things I'm noticing in the financial news. This morning, my wife and I got up super early. I woke up at 4 a.m. and then we went to the gym at 6. And I'll tell you what, it drained me pretty bad this morning, so I have to be careful about messing around with getting up too early. But anyway, if you come in, let me know if you can hear me. Give me a yes if you can hear me. Also, please hit the thumbs up button, thumbs up, share, subscribe. If you have not done that yet, you're watching drboycetv.com, the home for intelligent black people. My name is Dr. Boyce Watkins, and today I want to talk to you about what's going on in the financial world. I also want to remind you that the All Black National Convention is coming up very soon. So if you'd like to join us in Atlanta, October 20th, for the biggest B1 event, the biggest event on earth for intelligent black people, just go to allblacknationalconvention.com. So you guys can hear me. Okay, good morning, El Hodge and Justin Pender. And I see you also, Samuel. Good to see you. All right, so let me pop in and mention a couple things. First of all, this strike is pretty big. The stock market dropped by almost 200 points. And now it's down to 163. It looked to me earlier like the strike was kind of the biggest thing going on. But actually, what's fascinating is I'm looking at CNBC, and they took the strike off the headlines. I think that's really weird that this massive auto worker strike isn't still like top line news. I'm literally looking for this, and it's crazy. I don't see the auto worker strike here. So let me find the auto worker strike. That's very strange to me, to be honest with you. I'm sitting there thinking, why would you not? If it's a massive strike, it's the second biggest labor stoppage in 30, 40 years. The fact that they don't have this on the cover of CNBC, this is sneaky to me. I don't know. This almost feels like a little bit of possible corruption, because I'm looking at this. I can show you all this screen I'm looking at. I see a Planet Fitness share sink 15% after the board ousts the CEO in a shocking move. So what do y'all think? Give me a yes or no. You think there's a little bit of foul play here? That Planet Fitness, y'all really think Planet Fitness ousting their CEO is bigger news than the auto worker strike? And so I see here we go. They have something about Stellantis. Why Stellantis could face a longer strike than Ford or GM. Yeah, that's kind of the strike, but not really. That's y'all being sneaky there. Anyway, so let me find another piece here. So the UAW, United Auto Workers strike, begins as deadline passes with no agreement. It says here that according to NBC, General Motors CEO Mary Barra told NBC News that she does not expect the UAW to negotiate with the Big Three after 13,000 of its members walked off the job at midnight, beginning to strike against GM, Ford, and Stellantis. Quote, my understanding is no negotiation today. She said, our team is at the table ready to continue and get the problem solving we need to get people back to work. Okay, so they said the UAW did not respond. Stellantis could face a longer strike than GM or Ford. Stellantis has a problem that its local rivals don't. The company formed in early 2001 from a merger between Chrysler and Peugeot has more production capacity than it needs around the world. Stellantis has signaled that it intends to close or sell all 18 of its U.S. facilities, including factories and parts depots. The company has a total of about 35 factories and parts distribution centers in the U.S. So one of the things that I did see is that the strike could be connected to this idea that, think about this, you've had massive historic amounts of inflation. Workers' wages have not kept up with inflation, and also the labor market has been pretty tight, meaning that there's been plenty of jobs out there. So what I've sort of been reading is that this is the perfect time to strike. It's time to sort of move back in the direction of supporting workers a little bit more than we have before. America has done a really bad job of doing that, especially when you have the sort of shift away from labor to capital that's occurred in the last 40 years. And then you have things like AI kind of popping into play, and that's kind of making things even worse. So over time, you're really having sort of this interesting issue with potential labor strife. And what also could occur is that you could have other industries choosing to strike as a result of what they're seeing with the auto workers. So this could be serious. This could be significant. This could be something that lasts for a while. They said here that it's tough to say how long the strike will take for the strike to cut inventories at dealers or start to hurt companies' bottom lines. Now, what's interesting also about this strike was that they didn't do the whole strike at once. they had about 13,000 workers in strategic positions strike. They didn't strike everybody because apparently the union would have had to pay $70 million a week in strike benefits, and they've only got about $800 million in their fund, so they could really only afford to strike maybe 10 or 11 weeks, so the automakers could maybe wait them out. $800 million isn't very much when you're going up against companies with market caps in the hundreds of billions of dollars. So that's another issue that they're kind of facing when it comes to these strikes. Let's see. So I don't know if that's what shot down the stock market. I'm gonna look here and tell you guys what's going on with the market. By the way, I send out profit alerts on stocks that I like, things like that. If you'd like for me to send you my profit alerts once a week of the stock that I like that week, feel free to text the word stock to 31996. Just text stock to 31996. You can also go to my website, boycewatkins.com, which has a link there. And you can find copies of my new book called The 10 Commandments of Black Economic Power. I also have another book series called The New Black Power. And in addition to that, I have a series called Black American Money. So if you're into intelligent black people and intelligent books about thoughtful issues in our community, then feel free to go to my website, boycewatkins.com. So I'm going to read a little bit to you, and then I'll let you guys go, and I'll check back in with you a little bit later. It says, stocks fell Friday as investors wrap up a volatile week ahead of the Federal Reserve's policy meeting. The Dow Jones Industrial Average was lower by 180 points. Information technology was the worst performing sector, down 1.5%. Adobe shares fell more than 4% after posting better than expected quarterly results. Shares of ARM Holdings were slightly higher one day after a successful public debut. So some of you asked me about ARM, that IPO of ARM. Honestly, I wasn't particularly convinced that it was a great investment, but I think I might have been wrong about that one. However, there is a concern that I have about ARM as a company. I feel like the price earnings multiples are just insanely high, and I think that if this stock had an options market attached to it, which it doesn't, you can't buy options on it yet. I would actually buy put options on it. I actually got in my phone and looked to go buy some put options because I expected the price to go down, and I could not get the put options yet. So maybe when the put options become available, I'm going to do that because I think that it could be a little bit overpriced. But again, nothing's for certain, and this is not investing advice, but this is something that I've observed. Auto stocks, Ford, GM, and Stellantis were all higher Friday. Thousands of members of the UAW, United Auto Workers, went on strike after failing to reach a deal with the auto workers Thursday night. Elsewhere, Lennar shares slid 3% despite a top and bottom line beat. That's interesting that the shares would go down after they beat their earnings expectations. That typically means that their guidance was bad. That typically means that even though they made money and did well, they were pretty much saying down the pike, we don't see good things, and that's a concern. Wall Street is parsing through a mixed bag of economic data ahead of the Fed's policy decision set to be announced September 20th. The central bank, so September 20th is big. That's 5 days from now. The Fed is going to make an announcement as to whether or not they're going to increase interest rates. They're expected not to do that. If they announce that they're going to do that, then your stocks will drop. If they're not going to lower interest rates, most likely. They're hoping that they're going to hold steady. Let's see here. On Thursday, August Producer Price Index, which is the cost of producing products, showed core PPI was held in check last month, though the headline number rose more than expected. Meanwhile, August Consumer Price Index on Wednesday showed core CPI was slightly hotter than expected. Quote, there was an initial investor enthusiasm around inflation data coming in not too far out of expectations. On one hand, the inflation data was hotter than expected, but investors shrugged that off earlier this week, thinking that the Fed would not be inclined to raise rates again next week based on the August inflation data. Quote, but I think having digested the additional economic data that comes out, as well as ongoing geopolitical pressures and other developments we're seeing today, investors pulling back and taking a breather. So basically what they're saying is they believe that investors might pull stocks back, sell a little bit, accumulate some cash because they believe that the market is going to dip in the near future. But I don't know for sure. But I know August is historically a tough. It's not August. Oh my God, it's September. What is wrong with me? So forget what I just said. What I just said has no relevance now because I'm literally a month behind in my life. So anyway, so that's what I'm seeing in the market. I'm going to come back in a little bit later and talk to you guys some. And also, if you want to take a look at our financial flashcards and workbooks for kids, if you want to get your kid ahead when it comes to wealth, things like that, we have some really good financial flashcards that you may want to take a look at. We have some on real estate. If you want your child to learn about real estate, I believe you should start teaching them now. And so these flashcards cover all the key terminology that a real estate investor needs to know. You will be changing their life. You will be giving them an opportunity many of us did not have. have. So little things like security deposits, lease agreements, lease terms, lease renewal, stuff like that. These are all available if you are interested. So feel free to go to financialflashcards.com. If you'd like to take a look, you can get a discount on the bundle there, financialflashcards.com. All right, guys. So thank you so much for hanging out. Bless you, Michelle. I appreciate your kind words. I will check in with you a little bit later. And Anthony and Constance and Alvin and Betty and Sharon White, I see you. I love you. I respect you. And also my new Instagram is Dr. Boyce Finance. So if you want to follow me on the gram, feel free to do that. All right. I'll see you guys later. Have a good day. Talk to you later. Peace.